And we are live here on our halftime report, Tackle Trading's daily market show, where we break it all down for you: the price action, the news, the charts, the stocks, anything in between. We got a full crew here again. We've got Matt, Mark, Cody, and myself. Matt, how you doing today?
Tim, I'm doing absolutely fantastic. I'm excited to be here with the crew.
Fascinating price action on the market here today. As I watched this thing, the cash open was very, very strong for the bulls, hit into some intraday levels and resistance. People just didn't buy it, quite frankly. It has now given up most of the gains here, Matt. We're now at intraday lows. First off, just talk a little bit about what's going on from a price action standpoint, then we'll get into the news.
Yeah, interesting. Obviously, yesterday was a complete and utter bloodbath. One of the worst, days in points that we've ever seen. That Dow, down 2,000 points, just panic and selling and panic and fear and more panic and more selling. And it was interesting because right as we closed near the lows of the day, right after the market closed, the market started spiking. And what kind of happened is Trump started floating the ideas of stimulus programs, payroll taxes. We've seen other opinions out there talking about cruise lines, airlines, the banking sector, and so on and so forth. And so obviously you start seeing the market kind of rebound on immediately right after the market closed. And coming about 9 o'clock last night, I posted on Twitter, I'm like, it's going to be really interesting. You see this double top type scenario forming where you have a potential breakout. You saw the breakout, and then it comes and finds this zone of resistance around the old support here. Once that cash open kind of happened here, Tim, the market just didn't buy it on the cash open. And so, and I think one of the reasons why that faded today was Trump can plan, or Trump can float these ideas. But unlike the trade war, where Mark, you and I were talking in the pre-production show about how every time Trump would float an idea in the trade war, the market would just buy it up, because Trump had 100% control over what he could do with that trade war, whether he wanted to, ratchet up a little bit or calm it down a little bit. But the reality of the situation is, guys, Trump needs to work with Congress on these types of deals. And I'm not saying anything shocking here. Trump doesn't have the best relationship with Congress. And so, it's a little bit of cold water got thrown in that. And, even some of the Republican Party, Cody, you were talking about, Mighty Mitch perhaps not supporting payroll tax cuts as well. So, it's going to be interesting. I do believe we're going to get stimulus. I do believe we're going to get something out of Congress and the president coming together to fight this. We saw them come together on the initial, $8.6 billion in funding for the corona situation. So I do believe they're going to get something, but it's going to take some time. You're on mute.
And I was going to say, Mark, obviously you have a take on this as well. Price action rallied in the morning. It's given it all back. A lot of the headlines, like Matt broke them down, I think markets just don't trust them right now. Any kind of relief rally when you're that oversold like we were yesterday, any kind of idea that there might be relief, might be money, might be stimulus, market's going to pop in the short term, but it didn't sustain it.
You got two competing narratives here going on, Tim. And the first one is the very simple one. Tax cuts doesn't cure a medical scenario, right? The same way monetary policy reduction and rate cuts doesn't cure a health crisis. And so even though fiscal stimulus would be needed from an economic perspective, it doesn't cure the underlying problem, what's really driving the fear and the panic. And that's just the complete and utter uncertainty over how bad the coronavirus is going to impact within the United States. The CDC came out today and said there are some areas of the US where you cannot contain in any capacity. And so, fiscal stimulus, monetary policy, yeah, golf claps. Good job, guys, right? But it doesn't cure the underlying fundamental problem that is creating the uncertainty. And that's just the unknowns about corona.
Yeah. Well, what do we know, Mark? I mean, I know you study this probably as much or more than anybody I've met, quite frankly. You're watching data come in globally. You're reading different speeches and information from health officials around the world, as well as in the U.S. What do we know about testing? What do we know about U.S. outbreak? What do we know about the impact right now?
Epidemiologists widely concur that this is a fast-moving virus. That is the science of it. And we know a lot. In fact, we know so much more now than we did even 10 days ago. We're starting to get a really good feel of what this virus is. Is it doomsday? No. Is it fast moving, spreading? Yes. Can it overwhelm healthcare systems? Yes.
Italy,
So,
Italy is a prime example of that.
so we know so much more, and there are some really encouraging things from a human standpoint. Uh, China, South Korea, whether through draconian measures or through very efficient. South Korea has been the model of how future governments, how future societies should handle epidemics and potential pandemics in the future. Fast testing, fast measures, on top of it, government transparency, government information constantly flowing to the people. And what have you seen as a result? You have seen the cases in South Korea go down dramatically as a percentage of the total cases day after day after day after day. So wonderful hope of how this can be handled. Now, we've seen the other side that if you're not as efficient, if you don't have as much testing, if you don't handle the situation properly, we see what governments have to do. And we're seeing that in Italy over the last 48, 72 hours, where because their healthcare, it's not that the coronavirus is this mass Ebola killer that's going to take us all out. But what happens to a system is that the virus spreads, overwhelms the existing healthcare structure. And in order to spread out the cases, in order to handle the situation, they have to take drastic measures. Essentially, the country is in lockdown.
Mm-hmm.
So what we know about the science from epidemiologists, what we know from now 2 case studies, we know that something is going to eventually have to be done in order to spread this out. Now, there's a lot of different things that can be done from a societal level. You're seeing this happening in the United States. Jeopardy and Wheel of Fortune aren't having studio audiences. Businesses are having people work from home. Basketball tournament, the Ivy League basketball tournament was just canceled. So Princeton, you're in the tournament.
South by Southwest got canceled.
Mm-hmm.
Yeah, all of these things are going to have a mitigating effect to help slow the spread of the disease, to help the healthcare system adequately handle the cases that come in, because we're not only in a potential situation with a lack of beds in hospitals, but the equipment we have that was disrupted from China when this originated.
Yeah.
So, I mean, governments are handling this in different ways. Israel just announced in the last 24 hours that if you come into the country, doesn't matter if you're a citizen or a visitor, you got to be quarantined for 24 hours. I mean, for 14 days.
Which means don't go to Israel. That's what
unless you
Israel
want to be
is saying.
quarantined.
Don't come to Israel.
Don't come to Israel, or you're going to be quarantined, because the scientists, this isn't a media propaganda thing. This isn't fear and panic. This is a healthcare system problem. And countries are not adequately prepared or equipped to handle the healthcare inflow that a lot of individuals, like the director of hospitals in Italy, described it as a tsunami.
Matt, real quick, while we speak of Italy, bring up EWI, because that's an ETF for the Italian markets as well. EWI, the iShares for the Italian stock market. So, Mark, explain what's going on in Italy, because obviously they're on full quarantine now in the country, and they're even talking about defaulting on their bonds. What has happened there? Because that's kind of one of the worst examples of how they've contained it. But now they're taking extreme measures, though.
And once again, they have to, not because it's going to kill everyone in the population, but because they can't handle it from a healthcare standpoint. They do not have the resource, and Italy's not exactly a backwards country. You know, it's not exactly, a third world country. It's
the third biggest economy in the Eurozone.
Mm-hmm.
Yeah, it is first world, great healthcare system by any standards, but they can't because the virus simply moves faster than the government responded in the early stages.
Well, even prize-winning economist Robert Shiller said this morning, that basically one of the biggest problems is we don't know the extent of the problem, because people before they even start showing symptoms, they're contagious, right?
Yeah.
And with America only testing upwards of 4,200 tests so far.
CDC just announced this morning that we've had 4,800. To put that
4,800, yes.
in comparison, South Korea has had over 200,000 tests conducted.
Okay. And until we know the extent of the real problem, fiscal and monetary stimulus is not going to cure this situation.
No, and the market realizes this. Whatever short-term rallies that occur. I mean, the plain and simple fact with the coronavirus is that you can't hope your way out of it. The science is too overwhelming at this point. We've seen where it's gone, it's spread. You can approach it from a systematic South Korea standpoint where you identify someone that has, they quarantine. They've just done a masterful job. Or you can approach it from an Italy standpoint where your system gets overwhelmed and you have to shut down the country essentially because you can't handle it from a healthcare standpoint. And to hope that it's not going to happen where you live is just that. It's hope. Nothing in the science would back up that hope right now.
Yeah.
Well, and economically speaking, we are going to need stimulus programs because even when this virus, even when, it's in the rearview mirror and, we've came and gone and we look back at this moment and say, real scary time, but, the worst of the worst didn't come. But even if that happens, it's going to take a while for the global supply side to really kind of fix itself out. It's going to take a while for businesses to ramp up production and for consumer behavior to bring back the confidence. And so even if this has a short-term problem with a long-term fix, fiscal stimulus is going to be needed in that environment. Monetary policy is going to be needed in that environment. So I'm not suggesting that fiscal stimulus is not needed. I'm just saying the market isn't going to have the confidence until the uncertainty is removed, regardless of what the central bank or the Feds do.
I mean, Matt, if we were in Italy right now and we were analyzing markets simply from an Italian perspective, and the whole country was under quarantine, would we say that, hey, fiscal stimulus is just going to fix all these problems?
No.
No, I don't think so.
No.
In fact, the Italian officials have come out recently and said we're going to need relief on our bond payments from the IMF, and we're going to need help from the ECB and all this kind of stuff. They're already projecting that.
Go pull up that ETF again. What was it? EWI.
EWI. Yep.
I mean, and this is what happened after quarantine. Another leg down. I mean, as a society, there's a lot of lessons. Now, on one hand, am I on a personal level less worried than I have been at any point in the last 3 weeks? I am.
That news out of South Korea and China, if you believe the numbers coming out of China, and I do say that with a nice little quote, is encouraging.
Yeah, I mean, on a personal level, eventually healthcare professionals will get on top of it.
Yes.
Eventually in Italy, the system won't be so overwhelmed. They'll turn a corner. And it's not that the coronavirus will have gone away, but because they got a handle of it on their healthcare system, they will release the measures that are quarantining the entire country because they then have a grasp from the healthcare and they can handle new cases. There'll still be preventive measures. People will still be washing their hands. There'll still be this huge public and maybe social distancing. But once their health care system says, all right, we can now handle cases coming in. Because South Korea still has cases, China has cases, but they're very minimal. They're within the ability of the system to handle it. Eventually, Italy will get there. If it gets bad in France, if it gets bad in the United States, eventually the system will get there. So on a personal level, I'm really, really encouraged and less fearful than I have been at any point in this situation. Based on the mortality rates for my kids, kids seem to be really resilient because of the demographics I fall under. But it is naive to think that this is not going to have an effect in the United States based on everything we know at this point. Now, we'll get over that, but the big billion-dollar question is what are the economic effects when it's all over?
Sure. And Matt, bring up EWI real quick.
And we don't know that yet, Mark.
Now we have people, nobody knows.
We don't, from a market perspective, we don't need to see the coronavirus cure. We need to understand the data that's coming in. And until we do mass testing in the US, the same way, South Korea has done, the market's going to price in good news. It's going to price in bad news. It has a really difficult time in what creates the schizophrenic nature of the up and down nature here is just the uncertainty in how bad or it could be good. We just don't know. And that's what creates the violent up and down swings in the market, is their market's just trying to figure out pricing in the perceived risk or the buying opportunity on a daily basis.
Mhm.
And Matt, and I'd like to give a shout out that, people bash corporations, people bash different things. Society, American society is starting to take it more seriously. I mean, you see this in social distancing things, where, this virus is really nasty in close quarters, like any virus, right? It's really nasty in close quarters. And, people taking what some people label as overreaction. No, they're doing preventive mitigation things to help stop the spread of the virus, because the science is overwhelming at this point on
Mhm.
how this spreads and what happens. If you want to know what happens when you do nothing in the early stages, look at Iran.
Yeah.
Iran is a total, it is a mess by any measure.
Mhm.
Like, you have to do something. So let's figure out what that is as a society, and a lot of people are taking those steps proactively as
Well,
business.
and you're also starting to see, politicians on both sides of the aisle taking it a little bit more serious now too.
I
Yeah.
mean, Tucker Carlson last night on Fox News came out and was like, "Hey, this is a big deal, guys."
Yeah.
I mean, once again, the science, we know what's happening. It's going to spread. We need to be prepared, and take those
Well,
precautions.
Mark, most likely, if you start doing mass testing, all of the data points, it might be a little shock and awe at first.
Yeah, that's all.
But what would also happen is you would start to see mortality rates go down, most likely.
No,
Sure.
and we'll get a
Which would
handle
give
of
you
it.
greater confidence in security in, going out in public and living your life and sending your kids to school and maybe stop buying toilet paper in Utah.
Mhm.
No, I mean, so yeah, so like from a panic level, in fact, I have not been more calm, because eventually our healthcare system, the CDC came out today and said basically, what was the exact quote? He basically said that, our healthcare system is the healthcare labs were a little not as prepared as we might have should have been
Mm.
in this situation. Eventually, we'll get a handle on it.
Yeah.
Eventually, this thing is going to pass, and will be better structured for the next time something this happens as a society. And
I believe it's going to pass too. The only
you know,
question after that is, what is the economic damage,
Sure.
right?
Yeah.
And we just don't know that yet. We don't know.
Well, it just depends on how long it impacts travel, as well as, social events and going to restaurants and all that kind of
Well,
stuff.
it also is, how much money are we going to throw at the problem? I mean,
Yeah.
guys, the central bank just pumped in another $168 billion worth of repo actions overnight.
Oh, they will flood the market. They are not afraid, and that half point basis cut is probably coming here in a couple weeks or next week when they meet as well. Quick look at EWY as well, and I have an old phrase I use all the time. There's an ETF for that. If you ever want to track something, find the ETF that tracks that specific thing. This is the Korean stock market, guys. Now, obviously not tradable, very gappy, but it gives you an idea on a proper response what happens. It did have the major sell-off, but not the second leg down there, Mark, like Italy did have. In fact, Korea is up today, trying to hold support. I think there's some models there of what they've been doing in Korea. And what are they doing with testing that is so different than why can't we do that? Do we not have the test? Do we not have the capacity? Cody, I know you actually run lab testing. I mean, what is it about the testing process in the US, which is why it's so slow right now?
So I was listening to an interview this morning, and I forget who it was, but it was a CEO of one of the larger health testing, one of the facilities that's actually doing testing right now. And he was explaining that they're still doing manual PCR testing in order to diagnose the coronavirus. PCR testing is quickly replacing other forms of disease type testing, but it's almost automated all the time now. But if you're still doing manual PCR testing, that's a slow test. So for like when you're actually running a PCR yourself, it could take you all day to run, a slide of, maybe 10 to 20 different tests that you're trying to actually, figure out what they are. Because what a PCR is you're actually, polymerase chain reaction. You're combining the DNA to figure out what the genetic ordering is in order to diagnose what it is. So if they're still doing manual PCR testing, that's a slow test. We need to get to the point where it becomes automated, and then it'll start rapidly, going quicker. So the lab I actually work in, we do PCR diagnostic testing, and for everything that we have in our database, we can run that test in 24 hours and just quickly turn around.
Mm-hmm.
But these manual tests are slow, really slow.
Yeah. Well, I mean, obviously it's going to be an ongoing story, and we're going to keep updating you guys as we know information as the price action and the markets do develop. Stocks have all kind of tried to rally here, Matt. Intraday pricing we'll come back to later in the show and see where we're ending up finishing out. But really, that 2,800 mark, it bumped up there, above that for a little bit, looked like a little reversal. Now you've got kind of a bear flag developing there on that 30-minute chart. I mean, what's your read there on that intraday?
It's forming a bearish retracement on the intraday. If you kind of zoom in here, you got the momentum on the downside, big candle, big candle, big candle, kind of finds that 2740 support level that you really kind of found yesterday as well. And then you're rallying, coming back up into resistance. So I think an important number for the market today is going to be that 2800 handle. If the market can get back up above 2,800, you could see a rally coming into the close, no doubt about that.
Mm-hmm.
But it's got to reclaim that. If it kisses off it could get ugly. So the next 30, 45 minutes in the market's going to be an important telltale sign about how this market's going to behave the rest of the day.
Stock's still under pressure, in my opinion, like you're talking about. We'll update that by the end of the show. Look at crude oil, though. I mean, obviously, from some major headlines here between Russia and Saudi Arabia. Matt, you mentioned it earlier. Crude is trying to make a little bit of a bounce back rally, up 9% from yesterday's biggest loss in 30 years on crude oil. And quite frankly, quite bluntly, this is not over, and the last shoe has not fallen here.
It's not over when two leveraged ETFs that go out of business today. No, it's not over.
No, and even Goldman Sachs, Matt, I was reading some stuff on Goldman Sachs, their energy fund, where they hold like 600 billion in assets, including many of the drillers and frackers of U.S. companies. They said basically in a statement, we've lost a lot of our capital and we are deleveraging. We're forced to. So they didn't go out of business, but one of the biggest investment firms in the world talking about how all the losses in oil companies, as well as oil directly, is affecting them.
I'll tell you the thing that I'm waiting on in oil is not specifically what happens between Russia, Saudi Arabia, the U.S., OPEC, all of that jazz. We'll analyze that in real time. But what is the financial damage to the banks?
Mm-hmm.
That's the question I need answered, because these banks like Goldman and JP Morgan and Bank of America and so on and so forth, Deutsche Bank, they have billions of dollars worth of loans out to energy companies. And I guarantee they're getting beat up pretty hard. So what is that? What is the fundamental problem within the banks from the crash in oil? And we just haven't seen that. We'll start seeing with earnings reports though.
Yeah. Mark, I read a statistic today.
Let me give the news real quick though, Tim.
Yeah, go ahead.
First and foremost, Reuters reported here earlier today that Russia could be willing to play ball to stabilize the oil market. Saudi Arabia responds to that by saying we're going to increase our production by 25% to 12.3 million barrels a day, which is a record for Saudi Arabia. In fact, Saudi Arabia doesn't pump that much oil on a daily basis, which means they're so upset at this situation. They're going into their strategic reserves to flood the oil market. Russia then, basically says, Putin comes out and says, well, if you're going to do that, we're going to increase ours by 500,000 barrels a day to a record 11.8 million. So obviously there's a lot of rhetoric going on right now, and whether or not this is just trying to force these two major players in the oil market to come back to the negotiating table or not, no, it's not over. But from a technical perspective, when you're looking at this, obviously everything is overextended on the downside here. But when you break this down on a hourly chart here, you do have something starting to form on this hourly chart that could be a decent trade in the short term, whether that's a day trade where you adjust stop losses turning into a swing trade. But you have this rising support channel right here, Tim, as you're seeing this, and then you have a very, very consistent base right above the resistance channel, right where that breakout channel is. If you break out of that, and I'm just talking technically here, you break out of that, you might have a fairly decent opportunity on the buy side in the short term. Obviously, we're looking at intraday.
But on the flip side, if you break out of that channel to the downside, you might have a good down opportunity. That's pinching. That's a compression pattern.
Yeah, it is. But when you're looking at this with an increasing of intraday support with horizontal resistance, probability is to the upside. But the breakout to me would be easier traded because if you break that trend line on support, you got a lot of support underneath that 32, 30, obviously. But yeah, anything in terms of short term could be tradable here. But I think I like the pattern to the top side.
If you did trade that upside, I would have very tight targets because.
Oh, yeah, you might not even carry it overnight.
Well, this is the futures contract, by the way. Easy kind of pitch into our product tonight, Matt. You're going to be hosting a show tonight with Coach Keith King, who is a futures trader. I know crude oil is one of the top products he does trade. So when you're talking about tight stops and management, Mark, this might be a day trading setup for that play. You know, if you catch a move one way,
that's not a swing trade. That's a day trade. But yeah, I'm excited to host a coach's show tonight with the great Keith King, and you know we're going to be doing an intro on trading futures tonight. So for all the Tactical Pro members, get excited for that. Next week, we're going to be doing day trading futures. The week after that, we're going to be doing hedging, using the futures market as a hedge. And the week after that, we're going to be looking at trading options on futures with both Keith King and Gina Poor. So yeah, I'm excited, and I'm excited to learn in that environment.
I love it. If you're interested in learning futures and you're not a pro, there is a link in the comments below where you can sign up for a 15-day trial and go and check out that show tonight.
One last thing on oil.
So I finally decided to pitch our product, and you want to interrupt me there. I love this so much. I finally decided to make the old pitch, Matt, you know, try to get people into our pro membership where I know they'll learn. And here comes Mark. All right, Mark,
but what I really did is I knew that you would make that comment and that we'd spend more time pitching it.
All right.
I mean, seriously, come be a pro member. It's just an outstanding product, seriously.
Yeah.
I actually had a friend that Zero Market asked what happened in oil, because you know a lot of people don't follow oil, and I was just like, have you ever been through a messy divorce or a breakup? That's what you need to understand. That explains what's happening in oil right now. Like
at some point, MBS and Putin's going to embrace though.
You know,
Maybe I did. This actually was the question I was going to ask both of you a minute ago.
At some point, Putin and MBS are going to play kind with one another. They're going to send each other love letters, and they're going to get on the same page.
So I
read Putin can make money at $40 oil, and Saudi Arabia needs 47. Is that accurate? That's what I read this morning. Mark, do you know anything about where they're?
When are they going to embrace?
We don't know where Saudi Arabia needs oil for them to be profitable. What we know is when oil crashed underneath $35, Saudi Arabia pulled the plug on their oil war in 2015 because they lost $100 billion. The analysis is Russia needs it at about 45. Same with you.
Give me an over under on when they embrace.
Over under. I'm going to give you. I'm going to go tight here. I'm going to say 6 weeks.
Within 6 weeks.
Within 6 weeks, they embrace.
In 6 weeks is apparently Putin's putting in a a bill or a new law in Russia to try to get himself a third term, because he's not supposed to actually have a third term. So in 6 weeks, that's going to be happening. That gets approved.
Putin's going to die president of Russia.
Probably.
He's not going anywhere.
Not going anywhere.
Well, this oil
but Matt, they said it was a Democratic vote.
Yeah, he gets 90% of the country supporting him, right?
Yeah. Quick look at natural gas.
I'm going to take the over on that, by the way. I'm going to
like the over 6 weeks.
I'm going to take the over.
I'll take the under 6 weeks. Let's see if I can win one here. Just opposite bet Mark right now. Nat gas, little W pattern back into the falling 50, Matt. Little strength here in this one commodity out of the energy sector. It is catching quite a bit here, up 6.5% and really, really rallying. That's a tough chart to want to do anything with here, though, in the short term, boys. I don't know do either of you see
if you're looking at doing anything in natty gas on the long side, I think you got to see a lot more evidence than a couple-day rally off of a support level that's really, really overextended. However, with natural gas, if you kind of pull it back to a longer time frame, you're going to start seeing some fairly significant support levels that it is rallying off of. So as you can see, over the last 10 years, we're talking about that as major, major, major support. So you're rallying off that major, major level of support. But to me, to have this actually say, okay, this is something that, you know, we can get back into, we can start cash flowing on, we can invest in, we can start doing covered calls. I think you need to see natural gas close above $2 and then confirm a support level at $2 first.
From a sentiment,
a lot of feet here.
From a sentiment standpoint, though, a prolonged oil war does to potentially reduce the supply of natural gas.
Hmm.
I mean, there's some potential sentiment shift here from a supply side standpoint. You have a prolonged oil war. There is a potential sentiment shift on that. Now, once again, if Putin and MBS embrace 2 weeks from now, and oil goes back to the 40s, then that shifts quickly.
Mm-hmm.
But listen, the news has been so discouraging on natural gas. Like, man, just trying to find a silver lining, is nice.
Little momentum changes.
There's a picture at the G20 from last year of Putin and MBS longing in each other's eyes, embracing.
Yeah, a lot of people are very happily married until they start filing restraining orders.
Restraining order. This is Putin cheated, and they're getting back together.
So
I like that a lot.
By the
Golden,
way, if Putin's watching the halftime report, Putin, I was not saying anything negative. I'm okay with that.
they're listening.
You want
in
to make
Russia,
sure he
I'm
doesn't
sure.
like turn on a sleeper cell and come get
Listen,
you.
I'm okay saying anything about a U.S. politician, but I'm not going to say that about Putin.
Judgment right there. That's a stop loss.
Matt was questioning your manhood.
Yeah.
He says you like to look longingly in MBS's eyes. That's what I heard.
Listen, I'm just saying they're buddies.
There is an inconsistency here, though, Matt, because you have gone after Fatty Kim III for many, many, many years. So, and he is equally as dangerous.
Yeah, he never leaves North Korea.
That's true. Fair point. Gold and the dollar here, Matt. Gold down a little bit, obviously, in this kind of environment. You're going to get back and forth as you go, holding the trend. I got nothing else to add to that one. Just kind of in that same pattern, Matt. Anything there?
No.
Yeah.
If we're going to do fiscal stimulus, and if we're going to do monetary policy, and if we're going to go to a zero interest rate environment, I could care less what happens to gold on a daily basis.
Yeah. Dollar is rallying back off of this precipitous fall that it's had for a little bit. Here's the thing. I mean, I know the dollar is going to bounce here on these ideals, but the reality is that's still a very, very sharp downtrend, and they're going to still lower interest rates here in a couple of weeks and still flood the markets with money. Can't be a buyer of the dollar on this bounce here, I don't think, guys. I mean, there's nothing there for me. I would be actually looking to short it at some point on any of these rallies that kind of slow down if you're looking for an entry. Mark, that was your 30-second break you get from the halftime show every day when we bring up the dollar.
I'm actually interested in.
You always tell me you're not. Matt, no, I'm not listening to Mark on this one. He doesn't like the dollar. Matt, you get the dollar. Let's rock this
dollar.
one. Yeah.
Obviously, we're extremely overextended to the downside in the short term on the dollar, and you're just seeing a relief recovery here.
Yeah.
Line up a little bit of the positive news, perhaps, but 96.5, you got to keep an eye on 96.5. You got to keep an eye on 97. And I do agree that any of these buying moments they're going to be met with swift resistance. And let's watch that falling 9. Mark's a nice little girlfriend who he's never broken up with, who's been married to for a very long time, and they have a great longing relationship. Watch that falling 9 catch up to him. Let's see what the dollar does at that point.
Matt, what did the Bank of Japan do overnight? I heard they did some kind of stimulus package. Did they just kind of push some more money in the market? I did not see the detail.
All I heard was chatter out of the Bank of Japan from a stimulus process. But the Bank of Japan, they don't have the tools that the Fed has so far. The Bank of Japan can't do as much quantitative easing as we can because the Bank of Japan already owns 90% of Japanese bonds. The Bank of Japan already has a negative 1% interest rate. So if they're going to do anything, they're going to be buying market index funds.
Yeah. Okay. And by the way, if you're watching our show right now and you have not yet clicked the thumbs up, give me a quick thumbs up. Always just a reminder. We love getting the analytics out there. We want to have 1,000 people joining us live and expand our Team Tackle family here. Great to have you guys each and every day. And if you've not subscribed to our channel yet, click the button, click the bell, come back every day and join us. Stocks here, guys. Let's talk airlines for a minute. Part of that fiscal stimulus, Delta Airline, American Airline, Trump said they were going to come out and support them. I mean, with nothing in place and an industry that literally is just in free fall right now, I cannot see any reason why somebody would buy down here on the bottom.
Will you go to an intraday chart? Like, will you go to intraday chart? I mean, I think something, and Matt, you talked about it a little bit earlier. I think something is interesting happening in markets right now that hasn't happened in the Trump administration. Usually when Trump talks, markets respond. I mean, almost universally for 3 years, right? Like, he says something and the markets automatically buy. That's not happening right now. And I think we're entering get used to this phrase. It's going to take more than promises. And I think that's the market standpoint on a lot of things. It's going to take more than promises this time.
Mm-hmm.
We've given you that leeway, not this time. Promises aren't going to rally the market to all-time highs.
Well, they might pop it for a day, right? Or even for a couple hours. Yeah. That's where we've had those pops. Yep.
Again,
especially in overextended conditions.
First, a couple things. There is chatter of Trump talking about bailing out the airline industry and the cruise industry. First and foremost, let me just say this about the cruise industry. The cruise industry should not be bailed out in any capacity. They are not fundamentally viewed as a need for our society. So if we bail out Carnival, Royal, and some of the other cruise lines simply because they're getting their asset kicked a little bit, that should not be bailed out with taxation money. The government should not use my taxes to bail out an industry that is vital for the infrastructure of the American consumer or the American business. That's number one. Delta, American, United, and the airline, that is a different discussion because that is vital for infrastructure, business climate, you name it, right? But again, I said it before, I'll say it again. Trump can't just use executive orders here, guys. We're talking about congressional action here, okay? The power of the purse, according to the United States Constitution, rests within the United States Congress. So Trump can't just use executive orders to go do fiscal stimulus. He has to work with Congress. So simply saying something might have a short-term bump, but it's not going to have a lasting impact until we see exactly what's going to happen. Now, I do believe we will get that the same way we got a Cronus bill for $8.6 billion. But how long is it going to take and what does that look like? There's going to be a lot of discussions on the Hill this week. There's going to be a lot of discussions between the Republicans and the Democrats, and they're going to negotiate and they're going to come up with a plan. I do believe that. But what does that plan look like? And does it get this? Does it get the support of the president? Those are open variables that we just don't know yet.
Yeah. I'm going to make an argument here, though. I mean, isn't this really early even for airlines? Can't we let them go through some market?
So. Not for airlines.
Not for airlines.
I mean, market efficiency, let them go through some pain, let them lose some money.
No. You're not talking about that, Tim. You're talking about bankrupt and gone.
Yeah.
You're not talking about they're just losing a little bit of their gains. These airlines are already debt driven, Tim. They can't pay their debts.
Well, then can't the public make a deal like free bags for a couple of years, guys? I mean, if we bail you guys out, can we get something out of this?
Argument, but it's never going to happen. So we shouldn't even have the debate if it literally does not exist in the human conscience.
Oh,
they're vital for infrastructure and businesses in America. We should support those industries. We can't let those industries go under, or you would have massive chaos. That's what you would have. No. If you shut down a Carnival, nobody cares. Nobody's gonna fight for that. So I don't understand why we're even discussing bailing out cruise lines.
I don't understand our oceans, Matt. You don't enjoy the open sea.
I'm not a sailor.
In January, I'm lucky I didn't get the coronavirus.
That does not mean there's not a lot of downward pressure potential on stock prices.
Sure. No, I mean, I can't imagine buying an airline just because there's some hint at a stimulus. There's no doubt about it. Even Delta today.
Speaking of Carnival, very quickly, after a 70% move to the downside, Goldman Sachs finally downgrades them from a buy to neutral.
Yeah, these analysts, I got to tell you, they're always in front of it, aren't they? Yeah.
The analysts are having such a hard time. Qualcomm upgraded, UPS upgraded, Carnival downgraded, Disney's price lowered today. Deutsche Bank.
How do you get a job as an analyst?
That LB branch was a strong buy today. Deutsche Bank is the worst bank in human existence.
I think I might just apply to be an analyst because I feel like they just throw out numbers. And,
how could you upgrade?
Throwing darts at a board would do a better job analyzing than Deutsche.
Upgrading LB, I guess, because they're going to sell Victoria's Secret.
And if you're going to gamble, do you guys agree with this statement? That when fears start to subside, people will be far more likely to fly again than they will be to go on a cruise ship.
They have to fly. They got to fly for work. Yep. And so people will get in an airline and they will do that. I think cruise ships, I mean, you are locked down for several days many times. If one person gets sick, they quarantine the whole ship. So yeah, I agree with this statement for sure. I would be much more willing to
always been floating petri dishes. Even before the coronavirus, the rate of infection on cruise ships has always been high.
Because I'm interested in Carnival when it like goes to $4.
Yeah, at some point down the road, maybe, but nowhere near where we are right now. LB brands, I guess that upgrade, Matt, that is interesting. You actually had a bunch of stocks that were upgrade, downgrade. Why don't we run through them real quick? Qualcomm, UBS, and Disney. Saw the downgrade on CCL finally. What other stocks caught your eye, Matt?
Well, obviously Qualcomm here got upgraded. I'm trying to understand why the banks would upgrade stock right now in the face of uncertainty. But
that doesn't make sense.
Well, we also saw it in 08 when they kept bond ratings at extremely high valuations, despite the bond market literally dying, right? And so they never even adjusted that. And there's a lot of thought process that Moody's and S&P rating the two major bond rating agencies were basically either asleep at the wheel or two being paid off. But the reality was, I don't think you can trust upgrades right now. I mean, Qualcomm, down 20% off the highs, entering bear market territory. The Dow Jones entering bear market territory. If the Dow Jones closes underneath, 23,641, you're 20% on that. And at that point, you're talking bear market. So I personally don't understand Qualcomm getting upgraded. And the one I really don't understand is UPS getting upgraded today. I mean, UPS is just in a free fall right now, violating major supports. UPS got upgraded. We already talked about L Brands. Disney had a price downgrade at one of the banks. I believe their new target was 110. I am interested at Disney at some point.
Yeah, seriously,
points, right?
I never thought I would even have a chance to get my Disney stock back that got called out.
Yeah,
well, you might. And let's see how Disney kind of behaves around this $100 handle. It does have an earnings report coming up. Now, obviously, Disney's one of those stocks that's going to be really impacted based on Corona. Disneyland parks, theme parks, movie going.
Disney has their cruises as well.
Disney Cruise Lines, and so on and so forth.
No, and Matt, that doesn't even touch the movie theaters.
Yeah.
The theatrical release. I mean, Disney is really susceptible to a situation that would happen in Italy.
Well, and Disney Plus is not in any capacity going to offset any of that.
No. I mean,
they might see increased subscriber growth, but Disney Plus is not that good yet. Just in my opinion, it's just not. What do you got? Star Wars and Marvel movies?
Yeah, listen, do not tell my daughter that she would vehemently disagree with your assessment of Disney Plus.
Your daughter has some bias in that.
Dude, I watched The Mandalorian and I haven't turned it back on. So
yeah,
I don't know. Maybe it's not
but this is one of the things, because we talked about this a little bit yesterday. I really do more than at any point believe that there will be a turning corner. Not today, not this week. But once again, this comes down to science and efficiency. Eventually, we'll get a hold of it. I mean, there might be an Italy situation in parts of the country. It is going to get worse before it gets better. But we are going to turn a corner. And when I hope Disney's at $70 when it does that.
Yeah.
Because
Disney's going to be really high on my conviction list.
Disney's going to be one of those stocks you want to own for the next decade.
Sure. Yeah. No, I agree with that. Yeah.
And you know what? So is Amazon. Okay. And Amazon might turn the corner before these stocks like Disney that have a little bit more Corona scare than something like an Amazon here. So, but the reason I brought up Amazon, some bank upgraded Amazon's price target all the way to 2,700 today. And then the last one on the upgrade downgrades from the price perspective is Google, and that got downgraded to 1,350, current price at 1,240. Analysts trying to chase the price a little bit. But you know what? With some of these stocks like Netflix, with the Google, Amazon, the phrase that's been floated the last couple of weeks, Wall Street phrases, these stay-at-home type products, right? At some point, you're going to have pretty good opportunity in these stocks.
Yeah, couple from me as well, Matt. Baba, you mentioned some positive potential data out of certain areas. They said they're going to get some workers back to work. Their delivery service units are at full capacity at this point. We're seeing some services expand in that area of China that was shut down for a bit. I thought that was great news. And on the same kind of note, Tesla, actually, they're expanding their car parts division in China, and they are getting workers back to work as well. Obviously, Tesla was one of the hot stocks there in the market for a long time. Tough one on the weekly candlestick there, brought back, but I thought a couple of good data points out of China and even that data out of South Korea. it's one thing to say well, we can't trust the data out of China, but I think we can trust the information coming out of South Korea.
They've been totally transparent in this whole situation. They did not try to minimize their data on the way up. There's no reason to think that their data is not accurate now.
Yeah. Some stocks that were really hot there for a bit, Mac, that are giving you an opportunity if you like the bull flag. Zoom finally had a little bit of a pullback here, and weekly candlesticks, you say there, get back down to the daily for a minute, if you will. Tough candle to make any play on, kind of those need doji type situations, but this has been one of the hot stocks in the market. Matt, what's your read on that one right there? I know this is one of your target lists. Yeah. Tough one to trade.
No, it's impossible to trade. That volatility is ridiculous on Zoom right now. Now, invest, that's a different analysis, right? But trade, really, really tough. Everybody just gets stopped out on Zoom.
Sure. Gilead as well, interesting stock that was kind of working on some of this coronavirus vaccine and whatnot. Took a huge run up, now coming back. Got to dig into what the specific news on this, but also kind of these stocks might be impossible for swing trades, Matt. Is kind of where we are in the markets.
Our market is impossible to swing trade right now.
Yeah.
You know, I mean, there was a reason, Tim, that in the last 2 weeks, we didn't put swing trades in our scouting reports. We just put watch lists together.
Yeah.
And the reality is this market is going to be schizophrenic. It is.
Sure.
And that makes it in a very difficult swing trade. It is a day trader's just their zone. They're in their zone right now as a day trader. Because you see this volatility shift every day, and every day trader I talk to, they're like, Matt, we're getting 4 to 5 times the amount of price action on a daily basis. So why would you swing trade where you get the same type of price movement on an intraday perspective? I mean, Cody and I were joking about it in the pre-production show about how, watch the S&P rally, 1% into the intraday resistance zone. And so day traders are loving this volatility. They're eating it up. Like Gino Cody, Jake Lamore. Jake Lamore, young trader, has only been trading for about 5 years, Tim. Jake has had his most profitable week he's ever had in the past 7 days. Like just absolutely killing it. Keith King just absolutely killing it right now. So, you look at those situations and you can never force your will on a marketplace. And until we start to see some consistency from a day-to-day perspective, from a price action perspective, no, you can't force swing trading on the market right now. It will become a great swing trading market at some point. It's just not right now. This is a day traders market. The investors are trying to answer the question of when to get back in.
3 more. Let me see if I can grab your interest on any of these 3, because these are actually kind of conservative staple type plays. Look at Walmart pressing up against 120. If you broke there, Matt, I mean, is there something there? Or is it?
There's no swing trade there.
Let's see if I can grab it.
You can give me any stock, and I'm going to say there's no swing trade there.
Campbell's Soup.
Wait a second. If you tried to swing trade that breakout of 117.5 yesterday, you got stopped out today.
You got whipped. You got whipped again today.
No, Walmart is a safe haven investment in these types of environments.
Yeah, I do like it for that. Campbell's Soup, CPB. Everybody's buying soup cans right now. Look at the gap out backfill. Little interesting pattern.
Again, position maybe, but not swing trade.
And Dollar General, DG. I mean, go with the themes if you're looking for one. There's always something. There's a million momentum plays to the downside, but kind of hitting up against some resistance up there. Position trade, day trade, swing trades are kind of off the table in the short term, I think, is where your head is, Matt. My head is as well.
I think that's where the entire market's head is at.
Yeah.
I mean,
if you've tried to swing trade this market, the only thing that's been happening is you've been getting stopped out.
Yeah.
I mean, we've been really consistent. Like, I mean, there's on this. I mean, you can try to go find any cute little thing to take these gambles that just are gambles with all kinds of different things. If you want to become a successful trader, there are times that your strategy isn't appropriate. If you're a swing trader, it's not been a great 2.5 weeks, but we've been with our pro members been very, very, very clear about that. I mean, certain market conditions works. Day trading works right now. And, there are increasing people are looking, all right, I'm interested in Disney or whatever your Disney is. What's the situation? What's the pattern? How does this play out that will trigger me to get in to that, whatever that is for you? And people are starting to have that thought process. People are starting to identify, all right, where do I want to look, and spending time researching? Like, all right, looking at candidates that might, so when that time does come, they're ready to pull the trigger. So, I mean, that's what's going on right now in the educated, disciplined, knowledgeable segment of the trading world.
Mm-hmm.
I mean, that's where they're gravitating towards.
The problem with swing trading right now is where your entry needs to be versus where your stop loss needs to be. You're taking too much risk.
Mm-hmm.
Okay. Because if you tighten up that stop loss, the only thing that's going to happen is you're going to get stopped out. That's the only thing that's going to happen. And so because of the increase in volatility, you're for the same reason day traders are saying, hey, listen, I can get 4 to 5 days of price action. That means as a swing trade, you're putting your stop loss at such a significant level below the entry or above the entry if you're shorting, that you're just taking too much risk for a swing trade and the return does not justify the risk. So to me, it is a day traders market right now. The investor class is trying to decide when to start buying up stock, like these stocks that we've been talking about. And the bears are celebrating any momentum play to the downside.
No, and Matt, we're trying to, one thing we always do for our pro members, aside from just the general education on a billion different trading subjects, what were we spending time on when the market was at the top of the market? We were spending times on portfolio management, risk to the downside, not being leveraged. As we identified internally for our pro members, the market's not pricing in any of this freaking risk. I don't know how many times I heard you say that. And so what did we do with our programming? Portfolio management, risk management, buying protection. And what are we increasing now? We're on day trading techniques. I mean, I'm starting to do little classes, Matt, for pro members that I got scheduled, just talking about the basic concepts, nothing advanced, no advanced system, basic concepts so that they can gravitate in. You have a whole month lined up with Keith King. We spend more and more.
We're always going to do what's relevant to the market at Tackle Trading. We're
always.
Like there's education companies I know out there that literally haven't updated their systems in years and years and years and years versus what Tackle does. We're always live. We're always up to speed with what's happening in the market. And if the market isn't if we're a little concerned about the market, yeah, we're going to go put on a lot of shows about portfolio design, hedging, buying insurance, covered calls. I did a Tackle 25 show just last week, Tim, where, I was talking about aggressively managing covered calls to the downside, buying back at certain net liquidation values. So yeah, we're always going to be relevant to what's happening in the market. And when the market is in a good buying opportunity, we're going to be doing, long-term investing, value investing, fundamental type analysis so that people can understand, what stocks that they want to invest in for the next decade and so on and so forth. And that's what I loved about the podcast yesterday. When we asked Jake, what's his kind of his goals, and he goes, I'm looking at this situation. It's kind of what Muhammad said yesterday in the halftime report in the chat over there. I'm looking at this as a potential opportunity to establish my portfolio for the next decade. And that's how we got to look at it. So yeah, it's going to be a volatile moment. It's going to be a schizophrenic moment until we start to see, true positive news coming out of the Corona situation. But at the same time, I do believe there's going to be a really, really, really good buying opportunity on the long term.
And what will our programming be during that time period?
What stocks to own?
Like how to enter in,
how to evaluate the fundamental nature of a company that you want to invest in.
Mm-hmm.
Yeah, so
how to spot reversal patterns.
Mm-hmm.
Right?
Hey, Bitcoin's up. Is it back being a safe haven?
Yeah. I can't wait. I can't wait to have the Bitcoin discussion on our podcast one day when it's at 20K a coin. Yeah, Mark, I'll bring this up. No, I'm just messing with you guys.
I was about to say, is the podcast going to be around in 80 years?
Is this in the past, right? Real quick, Matt, the S&P 500 testing 2,800. I think it's a real key technical level on the intraday and on the short term is going to be what I'm watching for price action heading into the last couple of hours of the day here. This little bear retracement flag. We're pushing, we're trying,
Will you give me an hourly chart? I'm trying to see an hourly chart. Like, oh yeah, it bounced off. What was that? My girlfriend slapping it down?
Yeah, she sure did. It's going to be interesting, guys. It's going to be interesting. This is the kind of week where you join us every day. You join us live. You ask your questions. You participate. You be a part of Team Tackle. If you're still watching our show and you've not done it yet, quickly, Mark, give me a thumbs up on the YouTube channel, subscribe, and bell. And if you are not a part of our pro membership, take us up on the 15-day trial. Come and see what we got to do on the back end. I think you're going to, I know you're going to love it.
This is a great time. Like there are times like, and we were saying this, you know, a month ago with risk management, portfolio is like, if you want to learn these core principles that are applicable right now, this is a great time to sign up. Right now, if you want to learn basic day trading techniques, if you want to learn the futures market, coach's show tonight. Matt, you're going to be there with Keith King.
Mm-hmm.
So, I mean, that's the going to have some day trading.
Now, I'm going to be there. I'm not doing any talking.
No, you don't have to.
Listening.
All you got to do is throw him softballs on this topic.
I'm going to hit the record button.
Yeah.
That's what I'm going to do. And I'm going to introduce the great Keith King. But I am excited, guys, because, you know, Keith, obviously Keith has meant so much to me and so much to our community. But, you know, his knowledge of the futures in the Forex market is unprecedented, in my opinion. He's been a trader. He was a floor trader on the Boston and the New York Stock Exchange floor for about, what was it, 20, 23, 21 years, 22 years, something like that. And you know, he could, like when they shut down the floor in 2004, when Keith stopped being a floor trader, he could have retired and lived on an island. He's made over 27 million transactions in his career. He's a great trader. He's an amazing educator, and he is surpassed by how quality of a human being he is. I love Keith King, and I'm excited to listen to him tonight.
Yep. And Matt, promote the podcast real quick here. We drop it every Monday night. Obviously, it's up on the website.
We had Jake Lamore on again, Tim, since he did not remember Jake being on the two other.
It's been like 3 years, though. I mean, come on. I mean,
come on. Jake's our buddy. You should have remembered. But we brought Jake on, and we obviously do our market skyline. That's the first segment of the podcast. Then we do our feature presentation. That's the interview with Jake Lamore. And then Mark had a little game where we rated absurd headlines. And I'm still upset, Tim. I'm still upset about the principal forcing the little girl to dance with the boy.
That's a local story, dude. I mean, we could call this school board. Honestly, that's a local Utah story, and it's very upsetting, Matt.
It happened in Mike. If some person, man, woman, I don't care. If some person forced my 10-year-old little girl to dance with a boy that was a bully to her and didn't want to dance, first of all, why do we have dances for 10-year-olds? Come on. But anyways, outside of that, I would flip out, lawsuit, probably grab my bat and go find them, because that is wow. But anyways, there was a lot of absurd headlines like that we kind of ranked and talked about, had some fun with. So if you like the podcast, guys, the best way you can support us over there at Trading Justice is to go give us a 5-star review on iTunes. That helps us get this message and this podcast out to more eyes.
All right. My dogs are barking. We are done. We'll see you guys tomorrow. We're out.